As a beginner or intermediate forex trader, have you ever wondered each time you place a trade and the market just came down or came up and get you stopped out and still move your own buyer's direction, sometimes hitting take profit level? Like you have literally done everything possible, you have done your own part, your technical analysis, your everything, your bias aligning with your own strategy, only for the market to come and get you stopped out and still move your own direction. Like this can be very, very disheartening. Like this can be very, very sad, heartbreaking, because most of the time when it happens, you begin to ask yourself some silly questions like, is this forex trading for me? Like, what am I really doing? Am I wasting my time? All these stuff. Like, you get too emotional because of this thing. Now, I'm not going to totally blame you. It is because you fail to understand how the structure of the market works, identifying the valid break of structure from the fake one, so you can use it to trade price action in combination of support and resistance. And that's why if you're watching this video right now, you're very, very lucky. You need to watch this video to the very end, okay? So you get to understand how to trade this particular strategy profitably, so you avoid, okay, getting stopped out in the market whenever you want to trade. Very, very important. So make sure you watch to the very end, like and share this video, subscribe to this YouTube channel so you won't be missing out on some important educational forex trading tips that are going to help you become a better trader as you trade. All right, so without further ado, let's just dive into it. So I'm going to be using USDJPY for this analysis because it mostly play out in this particular pair. Alright, so if you come to the market, first you need to look out for is the structure of the market. Is the market bullish, bearish, or is it kind of consolidating in the market? So if you look at this particular market right here, this particular point, you can see the market consolidated around this particular origin, then the market became a bullish market right here. So right now, you need to look out for what? The trend. So for most of you that find it difficult to know when the market is going up, you can pick up your trend line like this and start from this extreme lowest origin to the point of identifying the trend of the market by calculating how many times the market have touched that particular trend that is going up, like this particular trend that is up like this, okay, to confirm that this is a uptrend. But for most of you that already know what you're doing, that these things don't become a problem to you, identifying the trend, you can literally see that there's a break of structure, there's a multiple creation of higher highs and higher lows, higher highs and higher lows. So this becomes automatically an uptrend, right? Now the second confluence you need to put in check is identifying the support and resistance and most recent support and resistance in the market. Now what you need to do is to just pick up your horizontal line and start identifying the support and resistance, where the market supported and where it resisted. So if you look closely here, you can see this is a support and this is a resistance, right? This is a resistance, and again this is a support again, and this is like a resistance here again. All right, so this is like a resistance and this is like another resistance. Okay, so you can literally see that we have already spotted our support and resistance. Now what again do you need to look out for? Break of structure. And now this is where it gets much more tricky, because this break of structure, a lot of intermediate or beginner traders don't know how to spot out valid break of structure from the fake one, like valid break of structure from the fake one, so you will not get stopped out. And trust me, because you fail to understand how to identify this valid break of structure from the fake one, and that's why using that fake break of structure always gets you stopped out to react to what really matters in the market, right? And that's just it. Now if you look at this particular market right here, you can see that this is the low the market created. This is like a lower low, and this is a lower low. This low is higher than this low, right? Now you can see that this particular low actually took out this particular low. Okay, after the market took out this particular low to give us another low here, we can call it a sweep. Okay, why do we call it a sweep? Because after this particular low, take out this particular low, like after this low, take out this one, the market push up, giving all that impulsive move to the upside, giving all that signal that buyers are currently in the market. And because of that, the market will leave some imbalance in the market. You can see this fair value gap, and you can see the market imbalance. The buyers bought for a couple of time, and what happened? The market actually break this particular high here. This is a high. This is a recent high. The market, the lower high the market gave us, this is a lower high and this is a lower low. So the market break this particular lower high, then again, what can you call this? This becomes a valid break of structure. A valid break of structure. Get that correctly, right? A valid break of structure. Why? Because the market swept this particular low to break this particular high. It becomes a valid break of structure. And most of the time when it happens, you can see that because of the action of institutional traders, market will leave imbalance in the market, okay, for that break. Now if you look at this particular point, you can see that after that break, this market from here pull back, this minor pullback. After this pullback, the market what push up again to break this particular high, on that particular resistance level. Pay attention, very, very important. We haven't come to that support and resistance, so how you can make use of it, how it can be beneficial to you trading this particular strategy, right? Now you can see that this high got broken. Right? Now, is this a valid break of structure or a fake break of structure? Of course, this is a fake break of structure. Why is it a fake break of structure? Because the market did not sweep any low before this break. Before this impulse movement to the upside, the market did not sweep any low here. There's no major pullback, like a healthy pullback the market swept before that low on 1 hour time frame. So this can be considered as a fake break of structure. And this is where most retail traders get into trap, because you have seen that there's an impulsive move to the upside, giving you that this is an order block. But then again, you fail to understand that this particular break is what a fake one. It's not a real break of structure. You tend to start looking for buying opportunity here. Now, this buying opportunity you are looking to buy here, is it resting on the support level? No, it is not resting on the support level. In other words, it becomes a liquidity that needs to be swept for a valid break of structure to happen. So instead of you looking to buy from here like this and get stopped out, imagine you want to buy from here, right? And you place your stop loss somewhere around here, okay, What will happen here? You can see what literally happened. This particular wicked week you are seeing here, get you stopped out. You can see that week. This week you are seeing here, get you stopped out. Let me map it out like clearly. So you can see this week, get you stopped out immediately and start moving in your own favor to take profit level. This is a common mistake most beginners do make in the markets, and this is how to avoid it. Now, instead of you looking to buy from there, consider that as a liquidity that the market need to take out. You can see, consider that as a liquidity like this, okay? Market need to take it out. So instead of you looking to buy from there, look for opportunities to buy from this particular point, okay? This particular point where the market created this kind of consolidation before the push to break structure. All right, look for buying opportunity here, okay? So what you need to do is to pick your buy position and put it somewhere around here. Your stop loss below that particular trend line, like this, below the trend line, okay? Now your take profit level on that pullback, that most recent pullback, this particular point, this most recent pullback here, that should be your take profit level. As you can see, you literally make 3.56:1. That is, if you are risking $1, you are making $3.56. That's exactly how to trade this. Okay, now let's go to another opportunity here. Let's look for another one. Now, after this becomes what? A valid break of structure. As you can see it, this becomes a valid break of structure, right? A valid one. Here becomes a valid break of structure. Remember, this is a valid break of structure. This is a fake one. This is a valid break of structure. Now, why is this one a valid break of structure? Because the market actually swept this particular low. After the sweep, the institutional traders took over and bought the market, not giving the seller's chance, pushed the market up to break structure with a full body candle, not a week. Not this week, but a full body candle as a break of structure. So upon that breakout, you can see the market pull back. The market pull back like this. After, so this one becomes a fake break of structure. Here becomes another fake break of structure spotted. So you cannot consider this particular one. You cannot consider buying from here, because if you buy from here, it's going to be a limited buy, and most of the time the market will get you stopped out. Okay. Most of the time the market will get you stopped out and still move your own direction. So always consider this as what? Since the market have given you something like this, on that pullback, look for what? The market is going to take out this particular low here you are seeing here to react to this particular fair value gap, this gap you are seeing here. So what you need to do, instead of looking to buy from here, okay, you look for what? For this fair value gap you have spotted here. Look for this fair value gap. You map this fair value gap right here. Map it out like this, as you can see. And this fair value gap is also resting on the what? On the support level. So this can literally give you sniper entry that you want. Okay, now imagine you are buying from here. Imagine you bought from here. That's a sniper entry. That is a sniper entry. So instead of you looking to buy from here, because if you literally buy from here, if you literally buy from here, all right, if you literally place your entry from here, because you are seeing that push that break structure, okay, which is a fake one, then you put your stop loss. You want to put your stop loss somewhere like this. What happened? Come and take you out of the market. You can see what happened. The market came down from here and take you out from this point. Take you out. This week took you out and still move in your own direction. So instead of buying from here, why not consider that as a liquidity the market need to swept? Okay, market need to sweep it so it can give us a valid break of structure. Understood? So what you need to do is to place your stop loss here for a safe trade, and your take profit is the next high the market created before that pullback. That's your take profit level. This is exactly how you can trade this, and you can literally see that this continuously played out in the market. As you can see, this particular origin, this particular break of structure, this particular break you are seeing here, this particular break is a fake break of structure. This particular break is a fake break of structure. Why is it a fake break? This one is a valid break of structure. This is a valid break of structure, but this one you are seeing here is a fake one, because the market did not sweep all these lows. All these lows you are seeing here, this is a low, this is a low, this is a low. The market did not sweep it on a pullback, so up here becomes a fake one, a fake break of structure, a fake break of structure. As such, the market will still come back to sweep all this low you are seeing here, reacting to this particular one to push up. As you can see, exactly what happened here. This is exactly what happened. Okay, the market came down and pushed up again. So what you need to do, instead of trying to buy here, because if you buy here, the market will still come down in most of the time to get you stopped out and still move in your own direction. So why not placing your trade around this particular zone, and that's it. You make your profit. As you can see, you make a profit and exit the market. As simple as that. As you can see, your stop loss is somewhere around here, so you're probably making 3:1 in this particular trade. 3:1 is okay, even though the market later reversed down to give us a change of trend, which is uptrend to downtrend. So this is exactly how you can trade this particular strategy, so you avoid getting stopped out in the markets. If this video is very helpful to you, don't forget, like and share this video. Subscribe to our YouTube channel, because I'm going to be giving you back-to-back trading updates on how to become a better trader. Okay, let me know what you think in the comment section. If this video is helpful to you, and if this strategy is going to help you in the next coming trade you are going to place in the market, whether you're trading with a real account or you're backtesting with a demo account, let me know what you think in the comment section. Don't forget, my name is 𝗖𝗿𝗍𝗍𝗍. I can't wait to catch you up in the next video. Peace and love. Remember, in trading, no emotions, there will be no challenge. Peace.